The metals markets are looking tighter and tighter. Even before the invasion of Ukraine by Russia, demand was beginning to outstrip supply in many areas. But recent headlines around the short squeeze of nickel in particular have pushed the metals markets onto the front pages of most mainstream newspapers. What's going on? We're talking now to an investment strategist from WisdomTree, Mobeen Tahir. Mobeen, it's a pleasure to have you today in the hot seat, because it is a big story at the moment, what's going on in the metals market. As I said, most of it is all around what's going on with nickel. Can you explain the sort of the big picture and then focus down onto nickel, into what's happening particularly with that metal?
Absolutely. So, Jeremy, Russia is a very important player in the global commodities market. It is the third largest supplier of nickel worldwide. So nickel is one of the many commodities that has been impacted by the tensions between Russia and Ukraine and the geopolitical conflict going on right now. But the interesting thing to note is market participants are currently faced with a lot of uncertainty. Only yesterday we saw the US and UK putting a ban on Russian oil and gas. And this just signifies how quickly the situation is evolving, and market participants have to contend with that uncertainty. Now, in the face of such uncertainty, it is possible that we see elevated levels of volatility even in industrial metals, which is what we're seeing right now.
One of the interesting headlines that I've seen in the last 10 or 12 hours or so has been the fact that the London Metals Exchange has stopped trading in nickel. The nickel part of it is to one side. The fact they've stopped trading, my understanding is in 150 years of existence, this hardly ever happens. What are they trying to do in preventing trade in nickel, which has held on to most of the gains that we saw at the beginning of this week?
Absolutely. So we've seen a very sharp increase in nickel prices in recent days. And as I was saying, as investors grapple with the uncertainty in what the scale and nature of potential supply disruptions might be in these commodity markets in the coming weeks and months, they may take certain positions. For example, certain short position holders may look to cover their short positions in the futures market. And those sorts of positions or trades can create these sharp dislocations in prices, which is what we're seeing right now, particularly with nickel. But it's not a case that's isolated only to nickel. This sort of situation can happen in any market and indeed in any asset class. So as long as this uncertainty persists, we can expect these sorts of events to continue.
Now, we know that, as I said at the top, that we've got this underlying demand that's beginning to outstrip supply. What is going on within the mining sector at the moment? Does the world just not have the resource to mine anymore of whatever it is we're talking about? Could be nickel, could be copper, could be cobalt, whatever it is. This demand and supply imbalance, is that going to be a continuing story? Or do you think as the prices rise, we'll see more and more mines that had previously been uneconomic come online?
Yeah. So, Jeremy, what we've had in the last, say, decade or so is a chronic underinvestment in the mining sector, mining of resources. And now we're at this point where the world needs to transition away from fossil fuels and move towards green technologies. So almost undoing all the work we've done in the last 2 centuries and building our energy supply infrastructure from scratch, moving it towards renewables, moving it to cleaner sources. And to be able to do that, the world needs more resources. Certain specific industrial metals like copper, nickel, aluminium, as well as others, are very integral in this energy transition story. And historically, because there's not been a huge appreciation in the price of these minerals, we've not seen investors incentivized to put a lot of capital expenditure in the mining sector. This is now beginning to change with price appreciation being driven by more demand from things like electric vehicles, energy storage, etc. There are more incentives for investors to put more capital into the mining sector, and this will be the trend going forward. And this will hopefully ease the sustainable supply situation for these. But it's a long-term story, which is why we are increasingly taking the view at WisdomTree that industrial metals have almost become like a thematic asset class. They are something that is aligned with the energy transition megatrend, and the story is here to stay.
Let's broaden the discussion out into some of the other metals. I've been reading some notes from WisdomTree and from you particularly, talking about those metals that are very energy intensive in order to try and produce an end product. Zinc, aluminium particularly. We've seen both those prices rise as well. Less than nickel, it has to be said. Clearly it's not the same dynamic going on there under the covers, if you like. But what would you say about this particular situation that's arising here? Clearly we've got an energy issue as well with, as you say, Russian exports being banned by many nations around the world. What is this doing to that process of producing nickel and aluminium and zinc to deliver the base product to the market? Is that going to see further gains for those two metals?
Yeah, so with aluminium, it's interesting. There is a combination of three very important factors to consider. First and foremost is the primary impact of potential supply disruption from Russia. Again, with aluminium, Russia is among the top producers, the third largest supplier of aluminium worldwide. So there's that direct impact. The second order impact comes through energy markets. Like you said, aluminium production and even zinc production, very energy intensive. So a lot of smelters, aluminium producers in Europe have had to contend with rising energy prices because that's a big input to the production process. That's number two. And number three are environmental concerns. Now, since the start of last year, we've seen China, which is a big aluminium producer as well, it's been looking to decarbonize its aluminium industry, moving away from coal towards renewables. And this is a trend that's going to take a few years. You can't just switch off your coal-powered electricity and move towards renewables. And what that has done is it has triggered this expectation that aluminium supply may be tight in the coming years. So that's why we've seen aluminium just being on that steady rise in recent months. And of course, the Russian situation has almost augmented that. So yes, absolutely, the long-term dynamics are there. The energy market plays a role, and of course, the Russian situation exacerbates the problem.
Yeah. Another metal that's followed in the market is copper. Now, forgive me if I'm wrong, I don't think Russia is a big copper producer. It's produced in other areas around the world, but that's rising as well. What's the reason behind that interest at the moment for copper?
Yeah, so if you think about here in the UK, we've got a ban on the sale of internal combustion engine vehicles coming into effect by 2030. So if you're going into the market for a new car after 2030, it is most likely going to be some sort of an electric vehicle. And now an electric vehicle requires 4 to 5 times more copper compared to a similar internal combustion engine vehicle. So just the multiplicative effect is clear. Similarly, for electric vehicles to really thrive, we need a well-distributed charging infrastructure. Now, charging infrastructure requires a lot of copper input. Similarly, we don't just want our electric vehicles to run on fossil fuel electricity. So we want to change the mix of the energy supply as well towards renewables. And with renewables, you need more energy storage, so better ability to store energy from whether it's solar or wind sources. And again, copper is very critical in those applications. So what we're seeing is a recognition from markets that copper demand is going to see exponential growth in the years to come, and that is something that market participants are beginning to price in.
Already, I think we were talking in the market about the prospect of supply outstripping demand. Is that the case now for copper? Are we seeing that, the demand outstripping supply, is that the case at the moment for copper, or is that something you'll be seeing in the future?
So the chronic underinvestment that I was referring to earlier with industrial metals more generally is something that applies to copper as well, because copper capital expenditure in the mining sector just hasn't been there in the last 10 years, or if it stays at the same level, we just won't be able to fulfill the demand in the coming years. So what we're seeing increasingly is a lot of industrial metals futures curves going into backwardation. What that means is markets are expecting a lot of tightness in these industrial metals. So backwardation is just where your current prices are higher than future prices. So investors are willing to pay a premium to secure the metal today. And that just is something that symbolizes tightness in the market. And with the backwardation going on for quite a while into the future, it also shows that markets expect this tightness to continue into the future.
Talking about this idea about energy transition and moving into these new areas, palladium is another metal we should be talking about in that context. But also, interestingly, I believe that Russia is a big producer of palladium, is that right?
Absolutely. So Russia provides somewhere around 40% of the world's palladium supply, so very relevant in terms of the world's palladium supply. And of course, this is one of the reasons why palladium has seen such a sharp increase in prices in recent weeks with the conflict. So palladium is interesting. Palladium is used in internal combustion engine vehicles and primarily petrol vehicles. It reduces the toxicity of emissions from petrol vehicles. But it will also be used in hybrids, because hybrids typically are hybrids between electric and petrol engines. So palladium is still going to be relevant. Now, in the last year or so, palladium prices experienced quite a lot of weakness. And this was because there was a lot of weakness facing the automobile industry. Semiconductor chip shortages were there, and therefore fewer new cars were being built. At the start of this year, we took the view that that situation should ease as more semiconductors become available to the automobile industry. But of course, we weren't envisaging a full-blown conflict in Russia. So there's an element of inflation in being baked into palladium prices. And of course, such sharp increases in prices is probably not sustainable. When hopefully things settle down on the geopolitical front, we will see palladium return back to fundamentals, and the fundamental story does look promising.
And of course, palladium takes us into this idea of precious metals. Some people might not necessarily regard it as a precious metal, but I think it sort of straddles both camps, doesn't it? So we've got to talk about precious metals in the context of gold, and gold takes us back to the geopolitical risks that are going on. And of course, there's an attachment to gold to what's happening with inflation and interest rates and so forth. So let's take gold first of all, and we have, as of the time of speaking, I think got very, very close to those August 2020 highs that we had. Of course, you wind in inflation. I mean, we've had higher than that for gold. But what are your thoughts on what's happening with gold? And that question as well goes back to this idea about the fact that we've got, I know, a lot of mines that are in this sort of area where they're very expensive to mine the gold. But if the gold price does continue to rise, again, the same sort of point presumably comes up, is that we're going to get more supply, and because more mines become more efficient or more economic to go ahead and get the metal out of the ground. What do you say about gold from this point?
Yeah, so historically gold has always been seen as a relatively effective geopolitical hedge, which is something that we are beginning to see again now. But it's not just about geopolitics. Investors often turn towards gold when there's an expectation that geopolitics, or indeed anything else such as the COVID pandemic, can have a meaningful impact on economic growth. And with the current conflict, there is an expectation that fault lines have been exposed in global supply chains, and that may have an impact on global economic growth. So with that in mind, it makes a lot of sense that a lot of investors are turning towards gold. But to your point about inflation, it's interesting because what this new dynamic is beginning to come up, that with a sustained disruption in global supply chains, we may see more inflationary pressures. And this could potentially undermine the Federal Reserve's ability to control inflation as well, because it might not have the same freedom it had before the conflict began, because it still needs to recognize that there are pressures to global economic growth. It can't just increase rates and forget about what's happening to economic growth. So there are these new factors for the central bank to consider as well. And if the freedom that the central bank thought it had at the start of the year has diminished now that the conflict has started, it means that its ability to control inflation may have diminished as well. And that could possibly mean higher inflation for longer, an environment that can be very supportive for gold.
One wonders whether history will tell us maybe the Fed ought to have acted earlier than that. That's for another discussion with somebody else. Just wanted to return to that point about gold producers as well. As I said, I speak to a lot of chief executives in this area, and I know a lot of them have interest in mines or potential mines that, as I said, it's going to cost a lot of money to get them out of the ground. Are you seeing, as an analyst, the potential, if the gold price continues to rise, more mines coming on stream? Do you think that's likely, or do you think we've now got to the point where really there's not much prospect of new mines coming on?
I think that idea certainly applies. If there is demand, if prices are on the rise, then in general that incentivizes the mining of any commodity, and the same idea will apply to gold. Particularly if more central banks buy more gold, which is something we may see being triggered by the current conflict. Even the Central Bank of Russia is one of the largest holders of gold reserves. So if this ongoing conflict, alongside elevated levels of inflation, is a combination of forces that really keeps gold prices sustained at elevated levels, this may incentivize more mining as well in the future.
We'll have to leave it there, but thanks indeed for joining us. That's Mobeen Tahir from WisdomTree. For more videos from us here at IGTV, join us on Twitter at IGCom, Instagram, and subscribe to our YouTube channel.